Good morning, everyone. Welcome to the Euro Trade on TopstepTV. My name is Mark D. I've been trading for 18 years. 13 years out of that, I've been trading for various prop firms, mainly specializing in commodities futures, which means energy markets, precious metals, and the like. Not so much equities. All right, let's have a look at what we have today. Yesterday, we had crude oil give us a glimpse of her old self. This is how it used to be, right? So let's have a look at CL for a second. It still followed the post-NY cut reversal. So that's like after 3 p.m. all the way into lunchtime. And then there was this massive flush down on some more news. So it overreacted and we ended up with a day that actually went over 1,000 ticks. To give you the comparison of what we've had over the last year, you'll be lucky if you got like 105 ticks on the day, maybe 120. So this is what crude oil used to be like. Most of the time it would give you a day of about 350 ticks. That was the norm. And then every so often it would go a little crazy and go to 500 and 600 ticks. Now, obviously, with any headline risk, you always have that possibility that everything goes crazy. And that's exactly what we saw. Now, I'm going to erase some of these levels for today. And because it was such a massive day, what crude oil tends to do, it's two things. It either doesn't mean reversion a day after, or it ends up in a nothing day where it's very quiet and it doesn't actually do much. So let's see, Joseph says, took a longer than Q, came up just enough to tap me in, then immediately went down to my stop loss. Always happens. So be careful with equities and longs during times of risk-off sentiment. What does that mean? When it's a risk-off sentiment, so usually something connected to the wars or any sort of uncertainty, equities will go down, and some of the risk products, typically gold, not crude oil at this point, because crude oil supplies are going to be a little bit sketchy. Obviously, every time you have something going on in the Middle East, there is worry that crude oil demand and supply will be disrupted. Now, usually if there's a war and they actually shut down oil refineries, crude oil will go up. Obviously, we didn't have that, so it basically just carried on going down. I do think that equities went up yesterday, though, didn't they? Yeah, so it was more of a risk-on sentiment rather than risk-off. But today, again, be very careful with any kind of headline risk and make sure that you familiarize yourself with what is risk on and what is risk off, okay? Because it gives you an overview of how the market participants perceive the news, and it's very, very helpful. Short Life Hacks is in here, says, I like that AC, or what looks like an AC. Yeah, that is an AC. We've been having a bit of a heat wave. If you know anything about UK, we don't really do AC because we only have hot weather like maybe 3 weeks of the year, and that's like dotted through 3 months from June through August. So most of us, and also you have listed buildings where you can't really change the outlook. So yeah, Short Life Hack says Middle East drama was a nothing burger. Yeah, it ended up being nothing, but obviously it was somewhat of a worry for people. Therefore, you know, we had crude oil overreacting and just going, all right, so we just go all the way down to 65 in one day. And that's why, you know, this is the kind of crude oil market that I'm used to, where, you know, you have several opportunities throughout the day, big moves that go either in one direction or kind of go up and down, which would be a more normal day. And effectively, it would give you an opportunity, even if you're wrong, for like the first trade, it would give you an opportunity to adjust and then ride the rest of it. But what was happening from pretty much February last year is that it would give you one single move and then get stuck in a range of about like 30 ticks. And that kind of kept happening. So I moved away from crude oil because of that. I don't want to trade things that are not moving. I'm not going to stay in a trade for, 5 hours just to get -5 ticks or, or like +10. And that's why I sought to move away to maybe natural gas, copper, platinum, all of which also have pretty tasty movements for a lot of the times of the year, especially during this time of the day. So let's start. I'm not going to do crude oil today. I am still going to be focusing maybe on natural gas. So I'm going to analyze copper, platinum, and natural gas for you. So natural gas, a little bit quiet for this time of the day. So that's more NYMEX territory. But let's see what copper is doing today with the levels and where we are. So we'll see whether we can make sense of it, right? First things first. Let's have a look at the larger time frame. I'm going to expand the copper chart, and I'm going to go to a massive time frame. I'm going to go to a 1 month time frame, and also try and clean up some of these old areas. Right, so what do we have? We have the monthly volume point of control dead in the middle of this range. Is this a range if we imagine this is like a 5-minute chart, even though it's a monthly? Yeah, definitely. So we have the top that was smashed. So let's do a little line there. Top that was smashed, and then they promptly came back into the range. That was followed by the next month pretty much all selling off. Then for the second part of the month, it decided to pull back from where? Oh, look, the bottom of this range after taking the low. Does that look familiar? Stop, run, and reverse. Stop, run, and reverse. So until this actually changes, this is your big time frame picture. We are in a range on copper. It is very likely that they can go all the way back up to this high and do something similar, or all the way back to the low at 410.50 and again do something similar. But we're not going to be trading from the monthly chart. Obviously, this is just an overview to see whether we're in a trending market on the monthly chart or not. Definitely not, right? So let's go down to the weekly. Yeah, weekly looks a little ugly as well, right? So we have this little phase 3 going on. So we tried to come up, and since then we have been distributing. I call distributions phase 3 and accumulations phase 1. What's the difference? Phase 3, the price rises up prior to consolidating. Phase 1, the price falls before consolidating. And usually the probabilities of what happens after, it's either a liquidation after phase 3 or a markup. So basically longs after phase 1. That's your like basic market structure. That's where you should start. Not like, staring at the 2-minute and just going, hey, let's go. You need to know whether we are in phase 1 or phase 3 or liquidation or markup. That gives you an immediate outlook of how you should approach the market, and then fish for the opportunities that speak to that phase, if that makes sense. So weekly chart range, when it comes to the candle bodies, I would say this is a range. I would call this little smash above 490 another stop run and reverse. So again, until we get one of the candles on a weekly chart that closes outside of it, this is all still a range to be played with. Let's have a look at the daily chart now. Daily chart, lots of overlapping candles. I'm not really too keen to trade when we're compressing this much. So maybe if I do a copper trade, perhaps it's going to be on the smaller side, maybe a bit of a 1R trade, maybe 2R if I can get a really good trade location. But otherwise, this is inside bars, overlapping, no clear trend. And that's understandable because of what's going on the large time frames, right? That's not to say that we might not have a trending move throughout the intraday activities, but for now, this is all looking a little bit cringy. Is that a word? All right, 4-hour chart, same thing. But this time around, I am going to try and find a swing, because 4-hour chart should be small enough to provide me with some more zoomed in areas where these moves are coming from. This area was tested so many times. So I would say a supply, decent quality supply, is up near the 5.0 level. So 499.80 is where it starts. But whenever you're so close to the round number, usually they will tag the round number, because that, you know, market makers are not going to be looking at weird prices. That's just intraday traders. You know, whenever I ask people, well, where were you planning of going in? And they're like, you know, we're nowhere near it. And they go 499 and 3/4. And I'm like, okay, why not 5? Why is that particular? Because, you know, trading is, well, it's not an exact science. Market makers also won't engage until they tag the price of interest. And, you know, with the options, it's always going to be somewhere at a round number. It's not going to be at a weird area. Maybe something that doesn't have much options activity like YM or something, maybe they can get away with weird numbers. But yeah, for commodities in particular, round numbers are your jam. On crude oil, even quarter numbers can be of interest, so 0.25, 0.75. If you manage to see the options levels of interest. And again, you can find these on the CME website. You don't have to like fish for anything else, but it is a bit difficult to figure out if you've never dealt with options levels. So yeah, T8 Storms says, damn, Deeyana has a new cam, it looks crisp. Yeah, so I bought the same camera that Creator was being filmed on, if you know the Star Wars Creator, right? Obviously not the same lens, because they spent like 20 grand on a lens, and I'm not making movies, so that seemed like a bit of an overkill. But still, I've got a pretty decent camera, pretty decent lens. I might get another lens, because I don't think this one like zooms in quite enough. And, you know, I'm going to nerd out on you with the cameras now, so let's not go down that path. But yeah, so anyways, back to the trading. But yeah, thank you. Glad you noticed. So yeah, camera has been upgraded. Yeah, so I would maybe be looking for shorts around this 5.0 area if we can get there. Not too crazy about hunting for longs, even if they do happen, primarily because we're running into this mess here. So it's like there's a lot of stuff going on here. This is not a good quality supply, even though bad quality supplies can get broken through. But sometimes it takes time, because all they do is they add time onto the event of a breakout, if that makes sense. Because, you know, you have so many people that have already sold there, and you see it happening here. It's consolidating, because every time we get up to it, somebody sells it, and they're like, no, actually we're going to passively buy it, but all the way back up into that area, and then somebody goes, well, actually I'll take a couple of shorts, yeah, around here. So then they sell it off again. So I don't like getting involved in levels that are unclean, and then levels that have this like unclean arrival, as we would call it. So what does that mean? Well, if you come up to a level, you want it coming up in nice clean candles, so like a trending move, then maybe a 3-bar reversal or bearish engulfing or something, and then falling away nicely. Whenever you start getting this bunched up mess, it means that we've arrived at the level in a dirty way. So we arrived at the level creating effectively an opposing zone right where it's supposed to be turning around. And what do I mean by that? Well, if you look at the composition of how these candles look. Like if you were just looking at it from an isolated point of view without knowing what came prior, and you just see this, it would be a bullish engulfing, right? A messy one and a weak one, because it's not closing above any sort of compositions of the previous candles. It's just comprised inside this area. But you would think, oh, yeah, maybe they'll go even higher from here. And they might. But if they do go into a short, just like we have a whole bunch of candles stopping us going higher nicely and smoothly, in the same way we have a whole bunch of candles now here, which is that dirty arrival, right? The unclean arrival that that I'm not too keen on, right? So really I would like us to clear this whole area, and then we may have nice moves. And this is why, if we do clear it at some point and then tag 5-0, that's where my interest will be. Now, a different outlook here would be if we get stuck in a range-bound day. We do have a 4-hour range as well. So then I would put on my Dolby hat, and I will be looking for stop, run, and reverse from the edges of this particular range. So you effectively find where the Asia high was, or even the London high, because that becomes overnight high in the late part of the session. So let's say if we smash through 492 and then reverse, that could be an intraday short opportunity. It could be. We have a GEX3 level, which is not the strongest, but it's strong enough. The gamma wall from the options activity is all the way up in 496. So I'm going to mark that. So that's where calls are located, and also a gamma wall, which usually tends to be a little hard to break, especially if you have an extended move in the run up to that level. It makes it really difficult to maintain energy and power to keep pushing through a level where a lot of options activity is located. So that's the idea. But otherwise, like I said, intraday, if we end up in a bit of a meh day, this GEX2 could be a stop, run, and reverse. Hypo. Or liquidity grab, as the cool kids like to say these days. But I'm still going to call it a stop run, because that's what I know it as, and I'm old. So deal with it. Anyways, let's move on to see where we are in relation to the value area and market profile, maybe even volume profile. So on this particular visible volume range, we do have a pretty big volume point of control down at 482.05. Now, if you see how this looks, we have these thinner areas here and here. So basically surrounding the big bubble, the big belly, or boobs, however you want to look at this. So these areas are more likely to give a quicker move through them, even though we're not seeing that just yet. But it is very much a range-bound outlook. Why? Because the distribution curve is right in the middle, and now you're sitting at the edges. So even the volume profile is telling me that we might be in a bit of a range-bound market here. And even though you can have a day where we run for 8 hours, like we did yesterday, and then towards the last part of the session, they decided to sell it off. I do believe we had, just trying to remember where the gamma wall was yesterday. I think it was 490 actually, and I was looking at it, but by then I was already in on natural gas, and I also did a short platinum towards the end of the day, so I don't like running more than 2 active positions in like in a single account. So yeah. Let's see what the value area is, because value area is a TPO based value, not really volume, and I like to look at both. So not, volume value to me is simpler, because it's like high volume nodes, low volume nodes. There they are. And they're very helpful, kind of similar with the value areas from volume, but they can be a little different. Now what I'm going to do, because it looks like copper has gone back to using COMEX, we're talking about copper here, COMEX as its main session. That's where like the majority of the moves have come from, rather than London, which is what used to be the case just a few short months ago. And I will tackle questions. I do see them, so just bear with me. And yeah, so let's do the value areas for the New York session, because again, I can't be trading something out of hours if it's not really giving me the proper movement. And I see that for the last, well, quite a few weeks actually, London has been a bit bleh. It looks like an out of hour session at the moment. So yeah, let's do the value areas for COMEX. All right, value high is located at 487.65. I'm gonna use coordinates for that. So 487.65. That is COMEX. Style purple. Maybe can I make it a bit? Can I make it a bit thicker? I can. Yeah. All right. So COMEX value. Where's the value? Low, 79.30. So let's put that in. 79.30. There we go. Ha. There we go. Already using the value high as a bounce point on an intraday time frame, so that's interesting. Okay, next I want to look at my quantitative extremes. So that means because we are only focusing on COMEX, I'm not going to be doing the ASR for London because again it's a smaller session at the moment. Let's just do the ADRs. So ADR high is actually, oh, that went really high. ADR high? What was that? ADR high is very close to the core resistance level at 496. So it's like 495.85. So that means what I'm going to do here, I'm just going to go /ADR high. So there's a confluence. Now this number might change as we start to make higher highs or lower lows because it recalculates, but for the most part it tends to be located in a ballpark a similar area. And then ADR low is located inside the value area just above the volume point of control that we saw in a slightly higher time frame at 482, but this one is slightly higher, so 482.25 is where the ADR low is located. So I'm going to make it into a dash line. I'm going to put a marker there. ADR? No, ADR. There we go. All right, so those are the big sort of points of interest that I would use, and basically I would just discard everything else. Anything that I add on top of it, like, oh, where are we in regards to VWAP? That's more directional. That's not necessarily a trade location. It might be a target. Like, let's say if we come up all the way to this GEX2 level, it's a quieter day, I might want to fish for my trade as a short from GEX2 down to the VWAP area. And then another hypo would be if we continue to mess around the COMEX value high, that would be another long. If we break through that level, that will tell me that we're more likely to be in a value acceptance short, in which case I might run a short down to ADR low at the very least, maybe even more. And then if we come up all the way to the big boy at 496, that's a sign for me to try and run a swing, to fish for a swing. So rather than fishing for like 1 Rs and 2 Rs, this is the point where if we do turn around and it's still early enough in the day, because time of day and how much time we have left is very important in intraday trading. I might actually shoot for the entirety of this range. So I would try and get the swing from 496 because it is a big reversal point, and then all the way down to the full ADR low area. So those would be like my 4 big hypos for the day. And until we have either one of those appearing, I'm just going to sit on my hands and not do anything. So hopefully that makes a little bit more sense. Okay, so let's have a look at some questions. Electrician, good morning. Good to see you here. He says, hello D, all I need is $1,000 per week. I have a 100K account. How hard can that be? Pretty hard, especially if you don't already have consistency. And just by the fact that you're asking that question, it makes me feel like you're more focused on the P&L rather than the process itself. There will be no payouts and no consistency in payouts until you actually focus away from the P&L. Money is a side product and side effect of a good process. It does not work in reverse. So I'm sorry to be kind of the bearer of bad news, but the more you focus on the P&L, the more the $1,000 a week will be very difficult to achieve, if not impossible. I'm somebody who is known by being like very no nonsense. I could pat people on the back for doing all the wrong things and go, oh, poor you. But that's not me, right? I'm always going to be like, well, that was a muppety thing to do. What did you think was going to happen? So focusing on P&L is a huge no-no. I know it sounds counterintuitive. I know it does. It's like, we do this for money. How can you not focus on the money? Focus on the money should be to the downside, not the upside. Upside will only come when your process is in order, when your system and your approach has a positive expectancy over a significant enough time. So not just 1 week, not just 1 month, but we're talking anywhere from like 6 months to a year's worth of trading. Do you have positive expectancy? If the answer to that is no, then any talk about any monetary side of things is completely irrelevant, completely irrelevant. Now, there are obviously people who have that consistency, and generating $1,000 a week is nothing. But just by the fact that you formulated your question in that way, I would deduce that you're probably not there yet. So just focus away from the money. See whether your system has positive expectancy. Can you hold on? And always remember that with trading, you need to probably leave about half the amount of money in your trading account so that you don't have your back against a wall. That usually means that you will need to generate $2,000 a week before you can comfortably end up taking $1,000 a week. Just as a general rule. We're not talking trader math. I'm just talking, how it usually works. So to give you an example, I think in May overall I had 30 grand's worth of profits. I only withdrew 15. Why? Because I wanted to leave some cash in there, right? I don't want to put my back against the wall, pay myself 20 grand, and then I'm like, oh shit, now I don't have money to play with. It makes it extremely difficult, and it adds an additional psychological layer on top of whatever it is that we are doing now. And it makes it almost impossible to get over those kind of mental hurdles. But when you have a nice cushion and you're trading within the means of that account, just like any other budget, so if you have a certain amount of money in your bank account, you wouldn't go overspending so that you are basically left with nothing. Because how are you going to pay for the bills? How are you going to pay for all the expenses? The food and stuff. Well, you should look at your trading account balance in the same way. Do you have enough money in there to comfortably trade the size that you're trying to trade without major disasters? I don't want to see anyone who is joining us here doing things like, oh, I'm risking 50% of the account in one day. That's just ultra stupid. I mean, all you're doing there is increasing your risk reward to the point that you're going to have to start everything all over again if you have a funded account. So if you have an XFA and you're not respecting it, you're going to have to start everything all over again. You've already done the work. Like, why are you making yourself work harder? It doesn't make any sense to me. So just bear in mind that whatever money that you make usually has to be doubled so that you can comfortably take half out and still leave plenty to play with. One thing I don't like seeing is when people are like, oh, I just got into a new XFA. I have 5 days of $200. I'm going to take half. And then what they find is that the maximum trading drawdown goes down to 0. So now they have an account of $500. You might as well just throw it out the window because that's what's going to happen, and start again. Because you've basically put your back against the wall. Things like that people don't think about in the beginning. And I think it needs to be talked about more. So, yeah. So be very careful with focusing on the P&L rather than the process. Once your process is in place, money will follow. I'm not saying it's all going to be easy, because it never is. And there's never an end point to trading. You know, some people are so consumed by getting into a funded account. They're like, yes, I've made it. It's like, no, mate, now the real journey begins. And, you know, this is just the start of a can of worms that can be beautiful but equally terrifying when it's not working. And you always have to, when things are not working, you immediately have to start going back to the drawing board, journaling, hour of the day. What did I do here? What was my expectation? Did I even have a plan? Did I go full tilt? Why did I go full tilt? Was it the speed of the price action? Like, what was the actual thing that put you on tilt? Not just, oh, I went on tilt. No, you had to get to the roots of the problem. What were you afraid of? What, that the money is gone? Well, the money is gone anyway, so who gives a monkeys? And then the second major cause of tilt is, oh my God, the price moved so quickly. My stop was taken out, so I just started entering trades like they're going out of fashion. And then disaster ensues. What was the cause for the mental trigger? Probably fear, lack of confidence and knowledge about what the hell is going on. Why is your trade suddenly not surviving? But what you should be doing is just stepping back and going, hold up a minute. That's new. Because usually my trades survive for X amount of time. Now, that's not happening. Something's changed. And you always have to have that almost like a suspicious nature of like, what's going on here? And then always train yourself to step back and go into observation mode. Trades will be here. You're not going to miss out on much. There will always be big days or smaller days. And if you have strategies that account for both sides of the story, for the big single direction day or a crappy tight range day, as long as there is some sort of rotation, you will never be afraid. But that takes years to develop. So whenever I see someone who is asking questions, oh, how can I make this much money? I know that they're on a very difficult path. So I always try to change their mindset so that they will get to that point quicker, rather than being in the spin cycle of getting funded, blowing up, and still having this mad idea of like, I'm going to be making 1,000 a week. Even though, you know, for some people that's not a lot. Once we've been in this industry, we tend to get a little bit, how would I say, brainwashed by big money, because it is a, you know, high moneyed environment. And sometimes we forget that, you know, once you start this job, even 4,000 a month is actually life-changing money for a lot of people, because it means that they suddenly have extra resources, and it's sometimes the best money that they've ever made in their life, and that changes the way they look at things. So that is possible, but not without a good process, not without you being critical towards the markets, not so much yourself. I mean, obviously you need self-awareness, but the main criticism of the market should come when something is happening that you didn't expect. And then you learn about the environment that caused the unexpected moves. That builds confidence, that builds experience, that will in turn help you to develop a more robust process. But it won't happen overnight. It probably won't even happen in a year. It's probably going to happen in like 3 or 4 years. And then maybe even 5. Usually you can look at consistent profitability and I know people don't want to hear that. I'm sorry to again burst your bubble, but it's between 2 and 5 years to some profitability. Some people who have other skills, like we've seen Jerome, Dr. Jerome, he's a very knowledgeable guy. He knows how the brain works. He was able to get there within 2 years, but even he didn't get there, you know, yesterday. It still took him time. It still took like a year and a half, 2 years for him to develop the experience in the markets themselves. He knows how the brain works. So he was able to control himself and avoid some of the pitfalls of most novice traders. That's where the transferable skills come in. So what do you do in your other job that can help you navigate the complexities, the psychological complexities of becoming a trader? Because trading has two parts. One is technical, the other one is mental. You can't just deal with one of them. You have to deal with both. And some people deal with the mental side before they start the technical side. And then they trip up because now they have, oh, I have excellent risk management. But I'm like, well, let's have a look at some of your trades. And their trades are just terrible because they don't have a good tactical skill. So they don't have, a good system that isn't flawed. So their psychology is amazing, but they're basically scratch traders because they're either not identifying the trade location. So you can have it the other way as well. Not very often, but it has happened where I've had people who have come to me for personal coaching and we kind of start talking and they're like, my risk management is excellent. And I'm like, okay, cool. And it's like, that's probably the only thing that saved me, but I'm still not making money. So, I want you to help me. And I'm like, okay, cool. And then we start talking and I'm like, so how did you approach this particular day? And they were like, oh, I didn't trade it. And I was like, why? We were coming out from a supply. Oh, it was against the trend. I was like, what trend is that when we arrive at a destination where the move actually came from? So it's like, that's no longer a trend. That's now possibility for either a reversal or stop, run, and reverse. Like, did you not see that? And they're like, no, did not. Well, this is why I need you. So like, okay, let's work. And in many ways, those sorts of traders are actually easier because the only thing I have to do is just put their tactical skill in order and, be done with it. So yeah. Anyways, let's move on. Yeah, Benedictine Trader says if you have 100K with a 4K drawdown, you don't have a 100K account, you have a 4K account. Absolutely agree with that. So how are you guys trading minis out of the gate? Well, you're not supposed to. At least not in my opinion. Yeah. But my Lambo was promised a Lambo. Yeah, and a mansion as well. Don't forget the mansion and hot chicks, right? Like, where are the hot chicks? MKRI 1000. I traded 5 XFAs and managed to pull out 5K, but then lost them because the remaining balances were too small to trade effectively. Yeah, exactly. Might be the lighting, but do you look like you're glowing? It's a bit hot in here, but I do think that the glowing is from the side light. So I've got one Elgato key light here, another one here, which gives a highlight. So I think it's quite a nice effect. But yeah, looks like the new camera is a success. Yay. T8 Storm says, what is your take on taking payouts on a live account? Would you recommend taking monthly, weekly payouts and reach a certain balance and take out payouts as soon as you make profit above that? I would agree with the second statement. So I would like to have a certain amount in there and then use that as kind of like a floor. And then you go, okay, now I have 20 grand in there and anything above that I will take down. At some point you might decide, maybe you pull out 20K and then you're like, okay, now I'm not going to do payouts until I double this. And therefore you're doubling the amount that you leave in there. So you wait until you're up at 40K and then that becomes your new floor. And then you take payouts, anything above that, and so on and so forth. To me, that's much better. And then also when you have a balance above a certain amount, if you have one big day, because you will be able to trade a little bit bigger, right? Maybe a couple of minis rather than just, micros and one mini. You could be looking at having a big day. Maybe you catch a swing. Maybe we get to 496 and I catch a swing where, I make, 7 grand. Well, I would actually draw down half of that day. So I wouldn't necessarily draw down all 7K, but I would be like, okay, let's leave half of the good day and then get the rest out. Put some in my pocket. I like doing that more than, oh yeah, let's just get 50% of whatever it's in the account. I don't agree with that because you won't grow. Like the account just won't grow. And then if you get yourself into a drawdown, what's going to happen is the account is just going to bleed below that floor point and then you're in trouble. So I would also suggest that you have benchmarks when you're sizing down. So let's say you start with, I don't know, 20K. It doesn't go well, it drops down to 10K. That's your sign to cut size. Let's say that you were trading a mini at the 20K level, but you managed to draw down quite significantly. Well, cut the size. You get down to 5K, cut the size even more. So keep cutting until you're basically turning the leaf, turning the page to not being in a drawdown anymore. And then once you pull yourself out, again, slowly increase the size back up in relation to your account balance. If you don't have those sorts of budgeting plans, you'll be trading larger and larger and larger to try and get out of a bigger and bigger drawdown, and then you blow up, and then you have to start again. So yeah. Tippity Top says that's why some props allow 5 minutes with a 2K balance. Yeah, they allow it, but it's kind of like the same thing as, you can take out a payout of half of your account once you generate $200 a day for 5 days. You can take out the money, but you probably shouldn't. It's, definitely putting your back against the wall. They have to have some thresholds, right? So just because it's there, again, just because you can pass a challenge in 2 days, doesn't mean you should, especially if you've never pulled out any payouts, or you've never kept the account for longer than like a month. If you've managed to keep an account profitably, not just like trying to limp through the XFA until it's blown and then making the whole process really painful, maybe consider spending some time in a combine to get proof of concept rather than, I want to get back to being funded. Why? You're just going to blow up again. So use the combines as a learning experience for, cost-effective entry into the proof of concept. That is your approach. Without that, there wouldn't be, Anyways, let's move on. Tippity Top also says it really shouldn't be there if the props we wanted good traders. I disagree with that because back in the day, see, now we are working on an entirely different model, but I come from the old school prop where you put down a collateral, which is anywhere from like 10K up to 25K, and you trade with that collateral. And if you blow that, they boot you out the door. But they do want good traders. Just because you gave them, 25 grand, it doesn't mean that they don't want good traders. It means that they know that not many people make it, and they turned it around. So, somebody like Michael Patak recognized that there was a need for people to go virtual prop. So that was the idea, right? And then he was able to offer it. Like, actually, when I first got to Topstep, they were not charging for anything. It was just like, try out the prop challenge, and if you make it, we'll give you a funded account. There was no sim. That came much later. So I've been in and around Topstep for at least 10 years as a funded trader, and it's one of those things. It's like they brought something new, and eventually they realized they can actually make it into a business model. And also they found that even with the free challenges, most people were just failing. So it's like, well, is this because nobody's paying for anything? Because, there's always that side of things. You get what you pay for. And we've seen it in the VIP as well. As a VIP coach, some people were in there purely because they were getting a free combine and 2 resets a month. There was no other reason for them to be there. And they behaved in the same way. It was like full porting it in a combine, blowing up in a day or two, and then just not changing. And from the perspective of a coach, that kind of pained me. And I tried to reach out to them, completely fell on deaf ears. I know that maybe one of them was in there. And I'm like, stop trading with 15 lots. Like, what are you trying to do? I don't understand. You kind of get lucky on one day, and then you need a much bigger target because you've just made like 60 grand in an account that nobody cares about, and nobody's going to pat you on the back because you overshot the target by like 100. times. Like, no one cares. Do that in your funded account. Don't do it in, in a combine. It's stupid. But yeah, so obviously we have some bad actors in the space. That's definitely true. But, Topstep, one of the reasons why I am here is because Topstep is probably one of the only ones that is really trying to limit you. What if they were so focused on traders failing, why the hell would they only allow you to buy 10 combines in a month? Why not make that unlimited? If all they want is just, traders to fail. Doesn't make much sense, right? Now, if you go to firms where you can buy, 20 accounts, 100 accounts, I can see that could be their motivation to get as many people to fail. But even like at some point, regulators have to start stepping in. Now, there will be, Topstep Live brokerage as well. So however that works out, we have to abide by the regulator rules. And that's going to change the game for this industry. Okay? So again, Topstep is leading the charge to give something more innovative to us. And, you can't mess around when you're a brokerage. So whatever, your opinions are about prop firms in general, remember that Topstep is a pioneer in the space. We came up with, Patak came up with a model. It was actually Patak, Andre, and another friend of theirs. So people don't give Andre enough credit. But Andre is actually a really, really intelligent man. And I think they kind of pushed him in the host position, which he struggled with, but now he's amazing. He's super energetic. He loves this job. He loves the game. He's like so enthusiastic about price action movements, and he's willing to always learn. And, he's actually pretty impressive. But he kind of gives off a little bit of, it's definitely a front. It's like, oh yeah, let's just goof around. And it's like, oh my God, it moved like 100. And it's like, Andre, it moved 10 ticks, chill. Oh no, it's a big move. Yeah. But yeah, people will be surprised how much, how much knowledge Andre actually has. So yeah. Yeah, I love Dre. I've had the privilege to talk to him outside of the actual on-air stuff. And yeah, I was, the first time I was like, okay, Andre's a bit different. Okay. All right. What kind of starting balance, Thomas Kane wants to know, what kind of starting balance do you usually see Topstep bringing people over to live with? I don't fully understand the margins when you're brought to live. You know what? They are not looking for balances. They are just looking for consistency. So you can get brought to live after 3 payouts. You can also stay on the XFA past 5th payout if they deem that you have too much variability in your system. So, if you're up 15 grand one day, but then you're down 10 grand the next, or you are, up 2K, up 2K, up 2K, and then minus 10K the next day. They don't want to see that. They want to see low variability. So it doesn't have anything to do with any particular balance. I've seen people brought up with 8K of balance, and I've seen people brought up with 150K of balance. Now, because, I am a contractor, right? So I don't have a stake. Obviously I love Topstep. This is why I'm here. But do I agree with the fact that they're bringing people in with such vastly different balances? I don't. I would like to see that be more consistent. But it is what it is. I'm not a part of the risk team. I'm not a part of the funding team. It's completely up to them. But just as somebody who did run my own small trading department a million years ago, definitely pre-COVID, I know that we had a range. So we had between 20 and 50K. That was our thing. So, you had to get to a certain level in profits in order for us to fund you more. But there was like a cutoff starting balance, and that made the playing field kind of equal for everybody. Whereas I feel that some people are allowed to bring up massive balances because they're inconsistent, but in turn they spend longer in an XFA, therefore they can bring larger balances. So I don't quite get that part. But again, I'm just me, not a part of the funding team or anything. So I'm not privy to that. I don't know what their criteria is, but from the stuff that I've seen, they look for that consistency before they will transfer you. That seems to be the biggest thing. Is copper any good now? I gave up after a week of full consolidation. So you know how I talked about CVOL? Remember that? CVOL from the CME, they are their own VIX. So its own VIX. You have to keep an eye on that. Whenever copper goes below a certain number, it dies a death and then starts reconsolidating. Now it seems to be better, but I'm actually more focusing on platinum. This is why I've been trading more COMEX than London recently. And, I've been looking at copper and I'm like, this is like watching paint dry. So I usually just either trade Asia, so I sleep through it, therefore it's a smaller position. Usually I will pop in anywhere from like 3 to 5 micros and then I will let it run, whatever happens. It's either going to be like, one loss of 350 or 175 if I'm in with a smaller size, or it's going to be like 300 up to $1,000 in profits overnight, depending on the size of the move, right? But I don't obsess over the Asia, and I don't trade it every day either. So I basically decided that I'm going to chill out with the London positions, precisely because all of the products that we currently have, and again, I was hoping that we would get DAX for London, we didn't. When copper goes quiet, there's nothing else for me to trade. So I have to go to the session where there's the most amount of movement, right? And typically you see some movement around 11, and that's outside of the stream. So it's like, what point is it for me to, trade something when I'm not going to be on the stream? So I might as well just focus on one session rather than wasting the mental capital on extra sessions and then getting mixed up with the London analysis, because it happened to me where I'm like, oh yeah, that was a London trade, and then I carry that over into COMEX. And I'm like, you have new levels. Stop painting the picture from the London session. That's different players. And so I'm just trying to make sure that I will trade the part of the day when we have the most amount of movement, if that makes sense. Did they announce the VIP teams? No, not yet. Not to my knowledge. I think that we're probably going to start in July, because there's no, we're already at the end of June. There's no point starting now. But we'll see. Again, I'm not privy to that. I'm just a coach, and we do what they tell us to do. They're like, right, now you start. It's like, yes. Granny Trader says, do you mind answering why you closed your trading company? Honestly, it was a mix of COVID and also a mix of a lot of infrastructure in order for us to grow. So I don't know whether people understand how much infrastructure is required, but even though, so you have the cost of funding traders already. Then you have to have a cost of the risk team. Then you have to have a cost of an IT team in case something goes wrong. Then you have to have a compliance team, because obviously you are sort of providing a service that is funding. And then over this side, if you accept investments from anyone, you're automatically considered an asset management company, and things change drastically. And that just became super complex, super expensive, to the point that I did not see how we can carry on with all the COVID stuff and everything that was going on. And I was just like, you know what, I just can't be bothered with this. It was too much stress, too much money going down the drain, and not enough coming back. So we had only a small amount of traders. I only had 6 of them, and because of the structure of the company, we actually had to basically work towards being an asset management company, which I did not want. And it was a pain. It was like, suddenly you're like, oh yeah, Dee, you have to hire a legal team now. And I'm like, what? Legal team? And they're like, they start, like, just for one person, it starts from like 100K a year, 120K a year. And that's in pounds, not in dollars. So, you want 2 lawyers, immediately that's going to kick it up to $250,000. It's like the money just like goes. So I was like, this is more difficult than I anticipated. So this is why when I see new prop firms come up, I'm just like, do you even know like what you're stepping into here? Because everybody thinks it's like, oh, we just put everybody on Sim and then we just get like nice sort of subscription fees. It's like, that's not that easy. You need so much infrastructure. If something goes wrong and you don't have the team to deal with, you will fall apart. And then if you're trying to go down the route of, well, we're going to make so much money from the failed traders and the bad actors in the space, but then they happen to run into some traders that can rinse the firms for all they've got, and you don't have anybody going live to make money from the live markets, that's where firms fail. Okay, so Topstep knows what they're doing. They've been around for a long, long time. They are very sustainable. Their model is sustainable. Any rule changes that you've seen is just to make sure that sustainability continues in favor of live traders. So they want live traders. They do want people to pull. This is why you don't have a cap on live accounts, right? But you have a cap of how much you can make in an XFA because it's demo. And just mark my words, once the regulators get to see what's going on with the prop firms, this whole getting paid out of demos, I will guess that that's going to go away. That you won't be able to get paid unless you're in a live account. So that would change the landscape completely for everybody. We're not there yet. We're probably talking like 2 years and stuff. But I don't know. I wouldn't be surprised to see that. So, to me, coming from the old prop world, it's like Sim was just for testing your skills. There was no like payouts from it. It's not a game, It's like, oh, a video game. I just click a few buttons and then based on my performance, I will get this much money. It was all just live accounts. So it's like you had to deal with all the crappy executions and, slower connections back in the day as well. There was none of this. I trade on a demo where I have perfect fills and I never have to deal with real slippage or actually pay attention to how many contracts are actually located on the dome to even execute a trade. Like there were a couple of times when I tried to go into a new contract on natural gas. This was like 2 weeks ago. So I entered 1 mini, nothing. So I was like, did I was like, I did click, did I not? And then I clicked again. Still nothing. Then I clicked again, like a lunatic. And then it filled me in all 3. So I was like, oh no, live markets, shit. So I had to close 2 immediately because obviously I, didn't realize that it was just the exchange waiting to fill because it was a new contract. Not many people were trading and they were literally waiting until the price just moved to the price where you had a counterparty order because they have to match orders. They can't be just like, oh yeah, like for example right now, if we take this M&G here, if I were to execute 10 contracts, unless they could, or let's go crazy, let's say execute 30 contracts, they don't have enough, right? So you add all of these and all of these, there's not enough contracts there. So what has to happen is that they have to wait until there's a price with enough units in order for them to match you with all 30 contracts. So you do have the setting called fill or kill, either fill all 30 or don't fill any, or you have fill partial. So I don't know which one Topstep X is set to, but I would guess it would be fill or kill, my guess, because I've never seen a partial fill. Like if you go in with 5 lots, I've never really seen it just fill like 1 or 2. So I'm gonna guess, make an educated guess that it is set to fill or kill. Zygus P says, do you trade your own capital or just props? I trade everything. I have a couple of my own. Well, I have a corporate account, then I have my own private, which I call YOLO account, but it's not YOLO as in like I'm full porting every position. It's just like doing slightly more trading than I should be on a slightly bigger size than the 130k account should be traded. should be traded as. And then I trade props as well. So yeah, but I prefer to pull money out of prop and then sort of use my other accounts as kind of growth. And one of them, which is the bigger one, I basically have a partner, and we only do like, oh, if the algorithm shows is this the time for a swing, that is when we're executing. It's not just me going, oh, click, I'm just going to do a whole bunch of clicks. So there has to be like a signal that's given by some of our mechanical systems, and then we decide whether we're going to execute or not. So that's a slightly different way of trading, I suppose. Trading Nickel says, oh yeah, I've had that even on Topstep. Can be an internet problem, not just a market speed problem. It definitely wasn't an internet problem. I'm running Starlink here. It's very, very quick. Never had that problem on XFA. I can tell you that. Like, I've never clicked and it not got filled on a sim. Never. It's always like almost instantaneous. Even though they kind of try and match it, but it's not the same, obviously. So yeah. Federico says, I don't understand how they can pay people on XFA. Do they copy trade your positions? You know what? I'm pretty sure that some people do have the position to copy successful trades from the XFA. I know that that we had that as well. You know, if you got somebody who was on a sim and we decided to put them through a sim because they had like because we were looking for mechanical trading systems traders, and then we were testing them, but we did have a button that would enable us to push them into a live account just to see how the executions are going to happen. So yeah, I'm guessing they probably do have that. I don't know how much that's used because people in the XFA tend to be a little bit crazier than the ones in live. But the payouts are generally from the entirety of the revenue of the company, whatever that might be. Okay, so it might not be just live traders. It might be, you know, in the future, I don't know how they've structured it, but it could be a part of the brokerage as well. So it basically comes out of the company's own profits. And effectively some of it will come, or probably a large chunk of it will probably come from the subscription fees. Obviously, it's a recurring income. Whenever you have a monthly subscription model, that's a recurring income. Whether people fail or not, if you're still in a combine, that would be a recurring source of income. So obviously, it's a good business model. And yeah, so the profits come from the firm. So it's like basically, let's say me, I have software development company. I used to have an IT recruitment company. And then if I wanted to, and yes, I had trading accounts. But if I wanted to fund traders, the 50K of funding for my traders would come from my own company's money, not necessarily from the live market that I made, but it would come from anywhere. Software side, IT recruitment side, it doesn't matter. It's just all companies' profits. And that's, you know, I can imagine that's very similar for many props. They sometimes even have, you know, if they have ads, like we don't, but if they have ads on their YouTube channel, it's very likely that they might have some ad revenue from there as well. You know, there's multiple avenues where you can make money. I know Topstep has the clothing company as well. That would be revenue. So, you know, it comes from all of that. Dakota has mentioned better feels typically live than sim. Yeah, Dakota trades NQ largely. NQ is very liquid. My kinds of products, not so much. So I don't have NQ on my live, but I have YM. That's not going to be the same. Do I have anything else? I don't know. Let's go to crude oil. Maybe that's a decent. Yeah. So okay, crude oil. A is got 100 up, 100 down. So you can see liquidity up and down the ladder. And there's a decent amount, 20, 11, 19, 15. But now, if I go to, let's say, platinum, look at the difference. 8, 17, 6, 16, 10, 6, 12. Platinum, massive spread, that's what you just saw. 1, 1, 3, 5, 6, 2, 3, 7, 2, 2. 1, nothing. 1, 3, 4, 3. See the difference? That will make it more difficult to fill. And at times when we're splitting contracts, it becomes even more difficult. So, because, you know, it's the volume is split between the two. So the old contract still has volume, but the new one is suddenly deciding to start trading. You will have split volume across the two, and that causes liquidity issues for some of the thinner products. Why do people trade ES over NQ? Because most people, if you do this long enough, 4, 5, 7 years, 10 years, eventually you get tired of NQ bullshit, quite frankly. You get to a point where you realize if you're going to survive in this game, that trading NQ so actively will burn you out, burn you the F out, okay? I'm talking, your brain will be tired, your body will be tired, you're gonna age like rapidly overnight because the amount of attention and speed that NQ trades at, it becomes really exhausting after a while. You've seen Mo. Mo said that he used to love NQ, but I always say NQ giveth and NQ taketh. It can give you fast profits, but you can also get absolutely messed up in like a single day when NQ starts doing NQ zoomies, right? It doesn't allow you emotional control. And at some point, you do this long enough, you get tired of it. You're like, F this, right? Now I just want to go trade something that is more calm. Now, for me, I've always been more of an energies and precious metals trader. I was used to crude oil being fast, but crude oil, it's not kind of like the problem that I have with NQ is the intra-candle movement, the seizure-inducing nonsense that it does during the main session just does my head in. Whereas copper, crude oil, even when they're moving in a smooth direction. DAX, like you name it. Even YM is a little bit more calmer, excuse me, than NQ, even though it's a fast moving product. But for example, you look at how copper is moving. There's no intra-candle up and down, up and down, up and down. We're up. Now we're down. No. Oh, we're up. No, we're down. Are we up? Are we down? Do we have a wick? Do we not have a wick? Are we going up? That's what NQ does. Whereas most other products, they will be more chill than that. They will pick a direction, either up or down, maybe a little bit of a wiggle. But generally right now, what do we have? We have a down candle. What did I say? Stop, run, and reverse. This could be it. This could be it. What's the time? This could be it. This could be my stop, run, and reverse from Gex 2. Overshot. And now if this holds, so I'm going to start going down through the time frames. I wish I had a 10-minute chart here, but we can use 5. And then see whether we can maintain a strong candle below this. And then stop would have to be a little bigger, so I'm going to have to go down to 3 micros. But let's wait and see how we finish this candle. And then maybe a test of 492 if we do end up below it. So it has to end below it. So it has to finish below it. Then it has to retest 492. And then I can pounce. Where was I? Yeah. So Angel Trade says it ages you as well. Mo is really only 23. That's a funny comment. Yeah. Oh, I love that. Yeah, Trading Nickel says, right, Deeyana, the moment you looked away from the ladder, there was zero liquidity through half that trade shown, usually showing. Yeah. Dakota's also traded NKD, experienced some scary filling delays. Yeah, so have I. This is why I'm not doing it. Midnight Live, Phil says, I talk too much. Phil, this might come as a surprise, but I'm here to talk. It's part of my job. Like, imagine having, you know, a trading channel where you just log in and then we're like this. Is that riveting? Riveting viewing? Yeah? Just charts with nothing. Like, why come to a YouTube channel where we discuss a whole bunch of things? Like, I was waiting for a setup. What do you want me to be quiet all the time? I don't get it, man. It's like, you don't like it, you don't have to watch me at the end of the day, so off you go with your day. Seriously, don't have the patience for people today at all. I'm trying to give up caffeine, so I'm on a decaf. Therefore, just don't do it today, Phil. Okay. Anyways, we're probably gonna lose a viewer now. Never mind. We're better off without them. So yeah, looking for 492. I don't like this close though. I don't like the fact that we have a little buying wick here. So let me just jump through some of the. Yeah, that's not that great either. Let's wait for 4 minutes because I want to see how the 15-minute candle is going to end. Because if that pulls up over 492, that's still not my stop run in reverse. That's test and overshoot and then a continuation. So we have to have a candle that actually tells me that we're breaking down through 492 again. And I'm also gonna change back to micro copper here so I don't get executed into platinum when I'm trying to trade on copper. Pi says, yes, I replaced coffee with matcha and never looked back. See, matcha, it's okay, but I don't know why I think there's tannins in matcha as well. It really kind of sits heavy on me. I used to love it when I was younger, but I don't know why it doesn't gel with me. I mean, decaf and water is so far working for me. Sort of. But my fuse is a bit short, so yeah. So Phil, don't mess with me today. Alright, we wait 1 minute 46 until the candle close. Andrew, NQ working on completing its 9th consecutive green 4-hour candle. Wow. I mean, I have NQ on another time frame. Jesus, yeah. Another time frame. I mean, another platform. We're gonna lose all of the end of day levels here on NQ. It's interesting. Where is this going though? Where is this going? Ooh. We have a well-defined high. So I just wonder whether maybe, just maybe, if we pull back down through 22,322, that could be the end of this move, and then we have a very good chance of going back down to this gamma ball. This is the end of day levels, by the way, so. But yeah, if it keeps going higher and sustains above 22,322, that would be a single direction day. But because of the well-defined high at that area, I would still be looking for stop run and reverse here. So definitely an interesting outlook. On NQ today, I just can't be bothered with it. All right, we've got about 15 minutes left in here. Let me actually do the low time frame scan as well. On HG, actually, I want that full contract. I mean, on a 2-minute chart, we did come down below in this area. Let's do 3 micros then. 3 micros. Oh, did I tell you guys the cows around the back of my house, they sprogged out, so they have like mini cows, they have micro cows, and we have babies like running around. Not in my garden, it's the farm opposite. Not opposite, farm backing onto my garden, literally. But they're so cute. So cute. They're like literally like tiny little things. They're just bumbling around, and then mum's coming and they nudge them with their heads, and then it runs. It's like, all right, I'm coming. It's so funny. It's very cute. I'm such a city girl. I grew up in big cities throughout my adult life. But yeah, seeing that, it's definitely changed my opinion about cows, because I thought they were just like, just whatever. They actually they will stare you down, man. They will be like, never seen you here before, and then they observe you. I was like, wow, I didn't know cows did that. Come on, I need a pop to 92. Otherwise, it's going to be a bit of a bigger stop. That I don't want. That I don't want. I don't want a bigger stop. Oh no. It's the big blue song about a stop that's too big. Alright, you know what? Let's try a micro. It's alright. It's alright. And I'm going to put a stop right above the highs of this 15-minute candle, and then if we don't get the drop, we don't get the drop. It's all right. But yeah, let's see if this can fail the auction for London. We can grab a few takes. This is not gonna be a big trade. This is all I'm gonna look for. Just grab a little bit. Yeah. Osterici? Probably butchering your name, I'm so sorry. Deeyana, when have you been moved to live? How many payouts did you take on your XFAs before that? So, I only took 3 payouts on my XFA before I got moved to live. So, I had another live account that I held for over a year. And then, for a multitude of reasons, we decided to close it. After that, I got back to the XFA, and I decided I was going to stay in an XFA for a while, but the risk team had something else in mind. So literally after a month and a half, they were like, yeah, you trade consistently, you're back. And I'm like, guys, give me a chance to breathe a bit, but you know, you trade consistently, they will pull you into live. So I'm back in the live account, and that's what we're working with. So no more flexibility of, you know, partialing one account to trade just NG, and then partialing the other account to trade, like, you know, just the precious metals, or designing one account to be just London and another account to be just COMEX and NYMEX, you know, so I don't have that flexibility. So whatever I do now, it has to be in the same live, and that makes it obviously a little bit more difficult, because even in my other accounts, I still like to partial. Like, for example, AMP gives you the opportunity to have sub accounts, and you do have to explain to them why. But if you just say, well, I want to designate this one for Asia trading, this one for London, and then I trade this one just for, you know, New York session, they will allow you to do that. And I would like to see that coming to Topstep, if I'm being honest. I would like to see at least 2 accounts, just 2 accounts. And then it would allow me to run the London session, you know, lock it up, whatever happens, and then carry over the second account into like a fresh outlook of the New York session. Now I kind of feel like I'm getting a little bit jumbled with like London and New York, because obviously I have to do these streams, and it's great, but I found myself getting a bit mixed up with the analyses. But, you know, you're supposed to look at value areas from both of them in a completely different manner. But I just couldn't, unless I slept in between, which I don't do every day, but I do have a nap every so often. I would be like, okay, now I need to move away and, you know, do something else or have a nap in order to really, you know, really get a fresh mindset, like kind of wipe the whole idea from the London session and then come clean for the New York session. And it was a little bit difficult, I'm not gonna lie, on the same account, because, you know, even if you have a losing trade, you're like, what was I doing there? And I'm like, oh yeah, and then you run it through your mind and that stays in your mind. And even if I have a winning day, I'm like, oh shit, no, I can't screw up the like, it just paints your mind to not be objective enough, I suppose. So that's something that I have to work on. That's the new challenge for the remainder of this year for me. Yeah, so trading nickels, I have the same issue. He says I can trade well on 2 or 3 accounts and like crap on one because I can't keep ideas separate. I feel you, man. Would you like a supreme pizza by 9 a.m.? I don't tend to eat pizzas on a Tuesday morning, but thank you. Maybe you do. But pizzas to me are... yeah. Anyways. Thatcher trades. Deeyana, what strategy you trade? I trade my strategy, which is a unique blend of market profile, supply and demand, and then some of my own concepts, like quantitative extremes, calculated by the help of either the session ranges over multiple days or the 24-hour ranges. And then I also use the options levels of interest to create confluence and more solid hypotheses on the day. And I typically have about 3 or 4 hypos, which I did spew out on this particular stream a little bit earlier. So yeah, this was one of them. Stop, run, and reverse from 492. The next one was 496 swing all the way down to ADR low. And the third one was... where's my mouse? The third one was the value acceptance if we break down through COMEX value high. And also another long from COMEX value high in case we don't break down and still end up smashing through the range, which is visible on the 4-hour chart. So that's kind of how I trade. So I like to have 3 or 4 hypos that account for both sides of the story using my levels. And then I just look for confluences. I mean, I say I just look for confluences. This is like 18 years of development of the strategy. And I have setups that account for trending days. I have setups that account for ranging days. And I will formulate my strategies based on whatever we have on that particular day. So, yeah. Mickey Ross saying, what kind of tool are you using to identify put call gamma levels walls? Well, I use Mentor Q, but actually if you go on CME, you will see those exact levels. It's a little bit more difficult to figure out because obviously it's going to be just like a table with like numbers, and you know, you can kind of get the same type of information. But it's just so much easier for me personally to invest in something like Mentor Q. And I'm going to get... that's where I get my options levels, Mentor Q. And DB says, morning D, I'm impressed again how copper directly goes once you put in the trade. Can you explain what made you put in at that moment, and what did you see that made you no longer wait? I have bookmap on the other side, so I was able to see some orders coming in. I'm just gonna, I think I'm gonna take this if I can, maybe a little bit ahead of time. Let me just see what's going on. Hold on. I will answer your question in a second. I'm just managing this. Just gonna see what's happening. So yeah, I have bookmap on the other side. that enables me to see the orders coming in, and there's a little bit of a delay from the time that they put in orders to the ones that end up happening. I'm gonna take this now here. Not the biggest trade, $100, but again, it was more of a scalp here. Primarily because I saw they started putting in, I could see it on the other screen, they started putting in like larger trades on here. Probably a bit of spoofing there. But we are also at VWAP, and sometimes what can happen, they overshoot VWAP a little bit and then just whip it back up. So I didn't want that to happen. So I'm just going to take my $100 and be happy with the little scalp there. But what did I see? So there was a couple of things. First, I had a hypothesis, right? So I had the hypo that we are going to run through this GEX2 and then reverse. I even put it there at the beginning of the stream before any trades were done. After that, I was looking at how the market was behaving once it started to bleed back down. I also had the GEX2 level at 492 as an orientation point. So I knew that we needed to go below it before I could actually execute. Then what you saw me do is go down to a 2-minute chart on the full contract, because I always want to reference the full contract for order flow. And I also saw on Bookmap that there was a whole bunch of big red bubbles coming in, changing from slight sort of balanced bid and ask to more offers coming in, if that makes sense. But the reason why I decided to cut it is because also over there I saw a big red heat map level to the opposite side of my trade. Ended up being a spoof, but whenever that happens, usually they want to hunt that. Right now you have it down at 488.80, so that's probably going to get hunted. But I did not want to be in a situation where I'm doing a scalp and then I wait too long and then they basically whip it back up. So also danger zone, VWAP. So they can touch VWAP and decide to whip it back up. So combination of those two. But yeah, it was basically me seeing the big bubbles stepping in and just kind of rolling over. And usually there's a bit of a delay between the big contract, the mini, and the micros. So it allows you like about a second or two to kind of front run the trades that you're already seeing happening. Like it's very quick, but in my eyes, it's not that quick because I'm trained to see these things. So yeah, hopefully that explains it. But it is brain processing power and just looking at some of these things happening over and over. It doesn't always happen like this. This was a scalp, so I was looking for a quick move from that level. If it didn't happen, I would have cut it. Sometimes, you know, if I'm looking for a swing, I will totally let it get to like minus 0.5 R, 0.6 R, and then let it do things. But the stop losses are generally larger for swings. And then I give it more time because I want to give it time to express its move. I want to stay in for long enough with a stop loss that's just appropriate enough to capture 200-300 tick swings. And you won't be able to do that on like, you know, 45 ticks or 35 ticks or, you know, 15 ticks. That's too small. So that's like scalp territory. Sometimes, yes, you can find good swings that start off as intraday, but we're not at that position yet because 496 is my level of interest, and ideally I would like them to try and pop above that and then nicely and orderly reverse it again. But this is all just a range bound London session. So yeah, what are your 3 EMAs? That's a very good question. As great trades, very simple. So it is 9 EMA, all of them, but they're anchored to high, close, and low. Therefore, they never cross over. So I don't want them crossing over. The reason why I have them on here is purely for the low time frames timing. So here's how I use them. When I'm looking for a trade, so here we had stop, run, and reverse as an idea, with 92 as my orientation price point. So 92. What I usually do is I wait for the market to go below the ribbon if I'm going to short, and it has to be like one decisive candle that either eats up all the rest of the candles that were going up. So it has to be one decisive candle that eats up at least 2 or 3 trending candles. If that doesn't happen, I will wait until you get one of those. That gives you momentum. And then you can go in. Same thing for exiting a trade. If I was in a swing trade and let's say we're looking at a 5-minute chart, because you don't want to be too low on the time frames, otherwise you'll be whipped out too soon. And then you get pretty decent profit, but then you see a big decisive move in the opposite direction that goes above the ribbon and takes out the previous sort of 3 trending candles. Just bail. That's your early exit. Because at that point, somebody decided to plow in a whole bunch of contracts. It's usually market makers, because retail traders don't have enough size. And they're probably starting to adjust inventory. So at that point, it becomes very, very dangerous to attempt that. So hopefully that helps. Can I apply to be live? No. It is only earned. You cannot pay to be on live. I have Series 3. That doesn't get you into a live account. Unfortunately, that still proves that you can trade and that you can be consistent. So, yeah. That's kind of like Mo's 2121. Yeah, I actually got an idea from Mo's trades, because I was looking for... Before, I only used 9 EMA on a 2-minute chart. That was my thing. But I kind of felt like that wasn't enough information. And then Mo's ribbon... He uses it in a different way. He actually uses it as a level, right? I don't. I just literally use it as timing. I have my levels from something else. And then I saw him using it, and I'm like, that's actually a damn good idea. So this is why I love prop. This is why I love my colleagues. Everybody has so much knowledge, and we all pick up things from each other. This is how really good systems are made, right? You have colleagues, you talk it through, and you pick up little bits and pieces. We're all a mishmash of things we've sort of picked up along the way. So Mo's ribbon, for me, I found it interesting as a concept, but I found my own way to use it. Similarly, Coach Paul has the 2 ATRs for a stop loss on a 5-minute chart. Well, I kind of use a 30-minute ATR, but then I fish for a big reversal if I'm going to go into, let's say, hypothetically, let's say copper is going to go back into a long, and ATR right now is saying 25 points, right? So when this flush happened, we actually vastly overshot the average range for the ATR. So if I was going to go long and I had a level in mind, I don't here, but if I did, this flush past the ATR average would make me think that there's now a chance for more upside, but only if it hits my level, obviously. That's not happening right now. This was just a classic range trade from the reversal down to VWAP, and then we stop. But anytime you have an ATR that busts through the average and you get involved in a trade right after in that same direction, just know you will suffer a drawdown. So trying to minimize that, I am trying to develop really robust systems. That's been the name of the game for 18 years for me anyways, where I am trying to minimize the drawdown, especially on scalp trades, and to get involved exactly at the right point when it's going to flush. And that's not that easy on copper or commodities in general, because they are slower. So you really have to be quite attentive and have slightly more fancier tools that will show you when the time is right for a scalp. But yeah, endlessly interesting. I mean, to me, I live for this stuff. Like, how can we make this better? And I'm a total nerd when it comes to trading. Granny Trader is asking a very good question. In your opinion, can you think a mentor can decrease the time to profitability? A good mentor, yes, which again is hard to find. Bad mentor can actually create more bad habits for you. So sadly, we don't have any sort of a database of good mentors. But yeah, good mentors are hard to find. You need somebody who is not just a good trader, but also a good teacher. Very difficult, because those are very two different skills. I've met amazing teachers that are like, wow, you are just like, just amazing. Like it's riveting to watch you. And then you try and get them to explain what it is they're doing and how they're doing it, and they're just like, well, there's a level here, and there's a level there, and then I just go in, and I'm like, but what made you, like, what is? And I'm somebody who asks a lot of questions, in case you haven't noticed. So I would be like, well, do you have like a pattern that I can look for? Do you have, what is the actual entry? Oh, well, just saw it on the tape, or just saw it on the tape. So what on the tape? Did you see, like, lots of orders? Was it a higher velocity of orders? Well, I don't know, I just kind of felt it. It's like, that's not going to help anyone. That's like wishy-washy explanations of a intuitive trading style. And you can't teach that. Let's face it, you just can't. So me not being particularly intuitive, and my gut as a trader or otherwise in life sucks in general. I don't want to trust my gut. I trust data. So I am literally the same as Anne-Marie that way. I need A plus B equals C. That is your entry. So I have like flow diagrams that I teach people via. And that tends to work for everybody. Like I have yet to find a person that's like, ooh, flow diagrams. No, they're like, wow, visual aid, I can finally understand. I get it. There's clarity. The cobwebs have been vacuumed. But not everybody teaches that way. So I personally would like to see the trader education industry go more down the path of a real curriculum. And today we learn this, and then we learn, because there is a path that every trader who's been doing this for a long time has to go through. And I think one great thing about Topstep VIP program is that every single coach that we have, we're all on the same page, man. I don't know how they managed to grab 11 traders that are also very good at coaching and explaining things and have experience. They've really, I'm in awe of Patak, of having that inspired moment to come up with a VIP and still have people who are equally good at trading and coaching. It's like, what? Like, where did you find us? So he has a special talent to sift out who's going to be their type of a trader, I suppose. So yeah. Anyways, guys, that is it. Oh, Paul H says, I use flowcharts to set my trades. That's nuts. Didn't know you did that. Yeah. That's my teaching style. Like the whole Market Stalkers method is like, this is the concept. Now let's look at a flowchart. It's like, I do use humor as well throughout the whole thing to kind of make a point stick better in traders' minds. But yeah. Anyways, guys, I'm gonna pause it here because I'm actually planning to do a little Market Stalkers daily stream later on after 3 p.m. my time. That is 9 a.m. Central, and that's going to be on my channel. So we're going to trade a little bit more, maybe not, but I'm definitely going to take the opportunity to do like a Q&A, because it's not going to be like your standard, oh, let's just sit down and trade. It's going to be more like market stalkers who are quite possibly already on the program coming to like chat to me and ask questions. Maybe we can talk through setups that are specific to my method. But yeah, I'm planning to restart that, and today is the day. So 3 p.m. Probably gonna try and stick it to an hour. What? Because I do have lunchbox trading to get to at 6 p.m., which is a bit later in the day. But anyways, if you can, come join me and let's do a chat. Otherwise, we're going to have Newer Wednesdays tomorrow with Jerome, and we're going to learn more about neuroscience and how we can start replacing some of our bad habits and controlling the new ones that crop up on this beautiful journey that we call becoming a profitable prop trader. That's all I've got for you today. Enjoy the rest of the session, and I will see you very soon. This was the Eurotrade on TopstepTV. I'm Deeyana Angelo. Take care.